Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 13th of January. Starting off with Ascent Resources, where we've had this extended base building recovery situation going on since, I suppose, August, September. We had a gap through the 200-day moving average in October, and the only disappointment here, I suppose, is it's taken so long for the shares to get on moving from that 5 to 7 pence consolidation area. I suppose the lesson normally in these situations is that the longer it takes to get a decent impulsive move going, the bigger the move we're going to eventually see, and hopefully that's the case here, at least while we're above the 6.5 pence area, that broken October resistance line. Looking forward hopefully to the top of a rising trend channel from February last year at 15 pence, or pointing to 15 pence hopefully over the next 1 to 2 months, so perhaps by the end of February, maybe going into March, and as that's valid while we hold above the 6.5 pence area, as I said. Next situation, a stock which has been requested today with some degree of urgency, and that's ARC Minerals. A nice gap through the resistance, which is normally a healthy and good sign. The view is that at least while we're above the floor of the gap there at around 4.2 pence, we should see much higher prices at this stage, looking forward hopefully to a target as high as 10 pence. And again, a sort of similar recovery, long dated recovery for ARC Minerals as we've seen at Ascent Resources. There could almost be sort of sister charts there, but above 4.2, looking for 10 pence on a 1 to 2 month time frame for the shares, and pretty encouraging situation there as well. Another requested stock is Cobra. Here we've got 1 or 2 points to note here. First is the bear trap that we had over the course of the end of December going into early January, just a couple of weeks ago, in terms of a bear trap below the 2 pence level, which was old September support. The fact that we really fell sharply, breaking that support, was probably a positive now, in the sense that it would have flushed out all the weak hands from the shares, or most of the weak hands from the shares. And the view is that at least while we're above the 200-day moving average at 2.09 pence, we're looking for higher prices, hopefully back towards November resistance at 3 pence. If you're a fan of the stock, you'll be eyeing up the top of that rising trend channel from the end of 2018, currently promising a target, a 2 to 3 month target as high as 4 pence. And if you're cautious of the shares, maybe wait for a clearance of the 50-day moving average of 2.43 pence. But it looks like enough has been done in the wake of that bear trap, December bear trap, really, to get the shares on the move over the next, hopefully by the end of March, we'll be up near that 4 pence level. Yet another requested stock, which is unusual to have 3 in a row. We've got Drumz here, and if I type in the right EPIC code, we'll see a much better experience. Here it's actually surprisingly strong. What the interesting part here was the sharp fall from that September peak through 1 pence, going back to 0.4 pence, but the last couple of weeks have seen the 50-day moving average at 0.47 recovered. For January, we found support at that level, and at least while we're above the broken line of resistance there from August, around the 0.5 pence level, looking for much higher prices, hopefully as high as the top of that rising trend channel from July last year at 1.6 or 1.7 pence over the next 2 to 3 months. So that's quite a punchy call. Ideally, there's no breakback below the initial January resistance at 0.65. So let's see if the shares, or 0.64, let's see if the shares are strong enough to do that. But at least a while above 0.5, looking for 1.6 plus for Drumz. So moving along to another decent looking chart. Here we had the rally flagged by a move on the Echo Energy daily chart in the middle of last month. It's taken a few weeks, and again been rather slower than one would have liked, a few weeks to break above the 0.69 intraday December peak. We did that yesterday on a end of day close basis, 0.73 the close, and at least while we're above 0.69, looking for a top of June trend channel or July trend channel there at 1.05 pence, hopefully as soon as the end of next month, but with a bit of luck even by the end of this month, given how long we've had to wait already. Stock which has bounced back quite nicely in the last couple of sessions is Gunsynd, breaking that resistance line there from last month and the 30-day moving average at 1.84. At least while we're above the 30-day line on an end-of-day close basis, looking forward hopefully to a top of August trend channel target as high as 3 pence, hopefully by the end of next month. At this stage, only really back below recent support around the 1.6 pence area, really delaying the upside scenario on Gunsynd. It's nice to see a fresh face in the bulletin board heroes, and it comes in the form of Mercantile Ports. Here we've got this great looking bull flag here after the gap through the 200-day moving average, which remains unfilled, sort of rising bull flag, which in theory should make it a very strong feature, or stronger than most. Just waiting here, probably on an end of day close through 0.41, the initial January resistance, and if we can get that over the next few sessions or on a weekly close basis, we're looking forward to a 0.8 pence plus target for Mercantile, hopefully as soon as the end of next month. One of the stocks of the year in the Share Talk sweep a couple of weeks back was OKYO Pharma, and it does look as though it's following its sister company in bouncing off recent lows around the 7.4 pence level early December, but an end of day close above the initial January resistance at 8.5 pence today, or over the rest of the week, should be enough to get the shares to begin a journey to retest October resistance around the 13.4 pence level, and hopefully that could be seen as soon as the end of next month. The upside scenario very much in place, or the recovery scenario in place, while we hold above the 50-day moving average at 8 pence. Big move today for Pires, which has been back in favour since its low 6 purchase. Here we've got the shares threatening to break recent highs and close above the initial January resistance at 11.79 pence. If we can get an end of day close above that over the early part of this week, or for the rest of this week, the next target here up towards 18 pence, which is the top of the rising March trend channel. So this looks like a mid-move consolidation ahead of an 18 pence target, and only back below the recent flag at 9 pence, really delaying the upside scenario. CINEGEN continuing to recover, and here we've got a situation where the shares need to, well, ideally they'll give us an end of day close through the initial January intraday peak at 160, but call it 168. If we get that, then hopefully we can head up towards £2, which is the August resistance line initially, hopefully by the end of this month, and by the end of next month the top of a November trend channel at £2.60 could be on the cards. Upside scenario valid while we hold above the floor of the November channel, currently with a support line there at £1.50. Just 3 stocks to go now. First is Seeing Machines, which I think I covered before, but it's made a lot of progress since then. Here we've got a rising trend channel and a big breakout. Top of the channel here from March last year up to 15 pence, and that target valid while we hold above the initial January resistance at 7.7 pence. So looks like even after the recent gains, decent risk reward on that technical setup. On to Tyra Party, which had made a great start to its life on the stock market, and looks like it's going to continue to do that, just bouncing off the floor of the recent flag at 80 pence. And while we're above 80 pence, looking for a top of a December price channel target as high as 110 or 115, hopefully by the end of next month. Finishing off with the one of the stocks which has done extremely well over the last couple of weeks, Tiziana, after a rather slow start. We had a break of the initial January resistance of £1.17, and then also the initial November resistance at £1.44, and at least while we're above that initial November resistance on the way down, we should see a top of July trend channel target as high as £2.20 or 30, hopefully as soon as the end of February. And the way things are going, we could even hit £2 by the end of this month. So looking pretty solid there at Tiziana at the moment. That's it from me today. More updates tomorrow.